Options carry an enormous amount of risk if you don't know how they work or how they trade. And the goal of this series is to really break down what options are, what moves their price up and down, so that we can understand how to build a strategy, manage it, and avoid as much risk as possible. We can never eliminate risk, but we can try to manage our risk.
Hi, I'm Desiree.
And I'm Denver.
Welcome to Options Trading Essentials, a video series dedicated to teaching you the ins and outs of options trading. Over the course of the series, we're going to take you on a guided journey through the world of options, starting with the basics.
And in later episodes, we'll discuss more complex topics like options pricing, the Greeks, and implied volatility. By the end of the series, we'll tie it all together by breaking down various option strategies while explaining concepts like trade and risk management. Ultimately, our goal is to educate you on how to safely and responsibly use options if you so choose to.
That's right. Throughout the series, you'll see a number of disclosures on screen. These are friendly reminders that options involve risks and they're not suitable for all investors. Examples we show on screen are for illustrative and educational purposes only and are not recommendations to buy or sell any security or an endorsement of any strategy.
The goal is not for us to say whether or not options are right for you, but rather if you're interested in trading options, this series can better prepare you before you make your first trade. So to kick things off, let's meet the squad.
Hi, I'm Michael Obasina, but you can call me Obi. I'm the options education lead here at Robinhood, and I've been trading options for over 10 years. Now, in this video series, I'm going to be your instructor, and I'm here to help you get started as you start trading options.
Hey all, I'm Kendall, and I lead an options support team here at Robinhood. And every day, my team and I are here to help you when you have questions.
Howdy, I'm Denver. I'm a content strategist here at Robinhood, and I work with the options team. My favorite options concept is volatility.
Hey, I'm Desiree. I'm a product content strategist at Robinhood, and I'm just starting out on my options journey, maybe like you. Since you've stumbled across this video, there's a good chance you've heard about options trading, sometimes called equity options or options for short. Options markets brings together many types of traders, each with their own goals and expectations. Perhaps the biggest myth is that options are just high-risk vehicles used by short-term day traders. And while yes, options can be used to speculate on the future direction of a stock, it is just one of many ways they can be used by investors and traders. In fact, options were created as a way to help protect stock portfolios against collapses in the markets. It was a simple way of transferring a lot of the risk of holding a stock onto someone else without compromising much of the stock's existing profit or upside potential. For all you may have heard, a large part of the risk in options trading lies with the trader, and that's you. To help manage risk, it is best that you learn and understand how options work before you trade them. Now, we know options can be confusing if you don't have much experience with them, and it can be difficult to fully grasp how they work, and that's okay. That's why we created this video series, to help walk you step by step through the world of options, starting at square one. So to begin our journey, let's welcome back Robinhood's option education lead, Michael Obasina, better known around the office as Obi, to walk us through the three main uses of options.
All right, as we get started learning about options, you're going to find that options are very strategic in nature, which means we can use them in a lot of different ways. But generally speaking, we like to bucket strategies for options into three different buckets. Let's break those down. Starting with the first, we're going to talk about a strategy called hedging. Now, hedging is a fancy term, but generally speaking, it just means we're trying to protect against some type of loss using an option. Let's imagine we owned XYZ stock. Our concern as a stockholder is what happens if the stock goes down in price? Well, that is a concern. And so we can go into the options market and create a strategy by creating a position. If the stock goes down in value, potentially the value of our options position will rise. So as the stock goes down, our options position potentially goes up, and that hedges our loss. Now, the second potential use of options is something we call generating income. Now, you might be asking, Obi, isn't that the point of trading and investing? We're trying to create income. It's because we're using some asset, in this case, let's just say a stock position, and we're using that as collateral to create an options position that we can collect income from. Remember, when you trade options, you don't always have to buy options, you can also sell them. So what that means is we can create an options position, and in this particular example, we might be selling that option, collecting a little income, and we're using our stock as collateral. An analogy I like to use is imagine if you owned a house, right? And you had a spare bedroom that you wanted to rent out and maybe make some side money. Well, using options to generate income is kind of similar. And so we're using this asset, in this case shares of stock, to collect income. Now, the third use of options, and one that probably people are more familiar with, is something we call speculation. Now, speculation is also just sort of a fancy term to say we're kind of guessing on where we think the direction of a stock might go in the future. So once again, let's draw a little stock chart here. Stock's going up, it's going down, and we may at some point want to make an opinion on where we think the stock will be at in the future. Now, with options, we can create strategies that potentially profit if the stock goes up in value, goes down in value, and even if the stock goes sideways. And that's kind of the versatility of options, which we'll talk about in future episodes. All right, one last thing to keep in mind. As we talk about the 3 different uses of options, it doesn't mean that we have to choose one or the other. As an options trader, we can choose to deploy these strategies based on what's happening in our portfolio. We might want to hedge a position, we might want to try to generate income using shares we own, and of course, if we wanted to, we might want to speculate on the future direction of a stock.
Hey there, so at the end of every episode, we're gonna get together and just talk about the concepts that we introduced in the video. We talked about why someone would use options in this video. One of the reasons being to speculate on the future, 2, to generate income, and 3, to hedge. Now, can you go into hedging a little bit more? That's the one I'm kind of about.
Yeah, yeah, definitely. So hedging is really just a industry word or fancy word for protection. So you might want to hedge against risk associated with the underlying shares that you might hold within your portfolio. So you want to protect against some of that risk. You might use an option contract to do so.
Just like any hedge, I like to use the analogy of like, if we look outside and it's cloudy, we think it's gonna rain, we might bring our umbrella with us, right? And even though we have an umbrella, we might still get a little bit wet. So that's number one. There's no such thing as a perfect hedge. There's no way to truly eliminate risk unless you simply close your position and you don't have a position in the market. The second thing I like to point out about hedging is there's degrees of hedging. If you have a stock position, we can hedge it a little bit, we can hedge more, or we can try to hedge a lot of it.
Got it. I feel better about hedging.
Now let's talk about mindset a little bit. You know, like generally speaking, you know, if we can talk about hedging, but we can also talk about, let's say someone's speculating. What's the mindset of an options trader who wants to speculate?
Yeah, this is where you start getting into strategy. And one big difference between, I'd say, an options trader and sort of your traditional long-term investor, they're buying shares of stock, and they're putting it in their portfolio and they're hoping the value of that grows over time. Maybe that stock pays a dividend, right? It's very much an investment decision. With options, it's much more about a trading decision. So we're looking at different variables and factors. Maybe we think the stock is going up in the short run. Maybe we think it's going down. Maybe we want to create a position that profits if the stock stays where it's at. So it's a much more strategic mindset, and it's a much more tactical decision making.
Sounds like there's a lot more you can do, whereas a stock is like, you either think it's gonna go up or you think it's gonna go down.
Well, that's the biggest difference to me, right? The idea of you have to be an active participant, you have to be informed.
Yeah.
And obviously you take on a certain level of risk, but you know, like hedging can mitigate that, but it's so many variables going into it.
Absolutely.
Yeah. Options carry an enormous amount of risk if you don't know how they work or how they trade. And the goal of this series is to really break down what options are, what moves their price up and down, so that we can understand how to build a strategy, manage it, and avoid as much risk as possible. We can never eliminate risk, but we can try to manage our risk.
I do want to point out also, every brokerage firm has their own policies and procedures in place, and they may do things a little bit differently depending on what your firm is. So if you really want to be aware of their policies, just check out your customer agreement and give that a look. There's a lot of information on there, but it will help you feel more comfortable for your specific scenario.
Please, please, please understand your customer agreement and the options disclosure document, which you'll find down below in the video description. So,
Yep.
I'm gonna read it right now.
Yeah.
it's over 100. I think it's 183 pages. So
I got
grab
some
a
time.
cup of coffee, give it a read.
Well, I am so intrigued now, and it sounds like there's a whole world of options to learn.
Yeah. On the next, options trading essentials.
You really can't talk about options without talking about stock trading.
All right, so let's break down what it means to be quote unquote long stock.
On the other hand, a little bit more complex, being short stock.
Denver, can you show us how to find a stock on Robinhood?
Absolutely, let's do it. Thanks for watching the video. If you enjoyed this episode, smash that like button and leave a comment. And don't forget to subscribe to the channel to get alerted when new episodes become available. Remember, options involve risk and are not suitable for all investors. Before trading, check out the link below in the description.